So you found the perfect house for your client, but they have to sell their existing home first. What are you going to do? Hi, this is Todd Baker, your certified mortgage planner. And today I'm going to talk about bridge strategies. A bridge strategy is a strategy that allows a buyer to purchase a home using existing cash assets and or creative financing that will then allow them to sell their current home and restructure everything, with the end result being a loan on their new house that is the lowest cost and best possible loan for them. So I'm going to talk today on how to do that. The first thing is the lender that you're working with has to have a level of financial literacy to be able to explain this to your client and for this to work. And that is probably wipes out about 95% of most loan officers. So keep that in mind. You have to be with someone with some financial literacy. And what the idea is that we want to look at, does the client have a 401k? So 401ks, you can take a withdrawal from a 401k oftentimes without penalty if it's to buy a home. The problem is that if you take a withdrawal and you take that money out, then you can't really put it back in, right? So the 401k does allow for a loan against it. And that's a great source to borrow the money temporarily to then buy the new home, and then you pay it back when you sell your existing home. It works great. Now, sometimes the loan from the 401k isn't enough of a loan to maybe put the kind of down payment the client would like to put out. So for example, maybe they're getting enough net proceeds from their sale to put, say, 25% down, and using the 401k loan, they can only put 5% down. That's okay. Here's why. Because we can do creative financing. So we can do a first and second combination loan is one of the things I do. And an example of that would be an 80% first and then a second. And then when we sell the existing home, we can pay off the second, right? And then you just got a good first loan. The other thing that can be done is the concept of recasting, where maybe we do a single loan with mortgage insurance premium even, right? And 95% loan to value, maybe even 97% loan to value, use the 401k loan, right? And then when the house sells, you can recast an existing note. Now there's some restrictions on that. I'm not going to go into the detail, but generally speaking, you can recast a note on a conventional loan. And how that works is this. What that means is they borrow 95%, and then when they sell their existing home, they pay a lump sum, say 25% of their existing mortgage off. So now the principal balance is way down. They can then pay a small fee to have the lender or our servicer rewrite the note back to 30 years so that it now is based on the new principal and then drops the payment down. So you can do a first, second combo, or you can do a recast. The other thing I mentioned is Roth IRA. So the way Roths work is that you can withdraw without penalty the money you put into the Roth. It's not I don't like to deplete retirement assets. I like to use them as a bridge and then repopulate them so the borrower's retirement can keep on going. But that is a possible area where you can get some funds as a Roth IRA. The other one, I wanted to talk, I'm looking over here some of my notes. I wanted to talk also about how to explain it to the borrower. Like I said, that's the key thing. As you can tell, as I'm going over, getting the 401k, getting the cash. The other one, it could be a gift from family, right? Really delving deep with the borrower, exploring how it all works, understanding how to explain it, and then having a viable exit strategy puts them in a comfort zone that empowers you to go pull the trigger. And then part of that, of course, in this environment is I would also look at what I call the overbid strategy, right? Everyone's going to have what's the maximum overbid or over appraisal, so we could structure the best possible offer. And so that's how it works. Those bridge strategies are wonderful. Now, what's the difference between a bridge loan? We are actually going to tease this, coming out with the best bridge loan on the market. It's phenomenal. And as soon as it's available, I will push that out and I'll send a video with the highlights. But generally speaking, what a bridge loan does, it allows you to borrow money to buy the existing home, right? without having to sell your home. So it's a new mortgage, and there's different ways they're structured. The only downside with a bridge loan is that it has its own set of closing costs. And these are short-term financing, right? Where it's like 30 days, 60 days, 90 days, maybe 6 months. As soon as the existing house sells, you end up paying down the note and refinancing the bridge loan into a permanent mortgage. Now, even though it has two sets of closing costs, if a bridge strategy is not available, then a bridge loan becomes a great option, and particularly when it's somebody that has an acute need for a house. There might be a reason they need the house, whether it's location or family size or some specific thing, or just they really want it. You now can get them into that house with no problem. So as soon as that's released, I'll let you guys know. But I want you to at least expand your awareness of, hey, they're not stuck with just a bridge loan. There's a lot of ways to be able to buy a house, another home, without selling your existing home. So I'm here to help. Please feel comfortable connecting me with your family, your friends, your clients, anybody looking to buy or sell real estate that you need me to help and to help you, because I work for you guys. Just let me know. Thanks so much and have a great day.